Hello, everyone, and welcome to today's Institutional Access webinar. Danielle DiMartino Booth and Jeff Booth talk inflation versus deflation. I'd like to invite our speakers to unmute their lines and turn on their video. Throughout the webinar, you can submit your questions through the Q&A button at the bottom of your screen. We'll save some time at the end of the discussion to answer these. The session will be available on demand. All registrants will receive an email once the recording is live. I'd now like to turn the event over to Blockworks Group co-founder, Mike Ippolito. Mike, please go ahead.
Great, thanks a lot, Jules, for the intro and for your impeccable selection of music, as always. I am extremely excited today to be joined by Jeff and Danielle DiMartino Booth. We're going to be talking about inflation versus deflation. We were actually really tempted to call this the Battle of the Booths, although I think our guests today actually agree on a lot of the topics that we're going to cover. So before we dive in here, Jeff and Danielle, could each of you do a quick, just 30-second intro on yourselves?
I'll jump in here. I started off on Wall Street at a firm that's no longer with us called Donaldson, Lufkin and Jenrette. I got my second master's in journalism at Columbia, retired, left the industry, signed a non-compete, worked for a newspaper for a few years, got called to serve the country at the Federal Reserve, did that for 9 years throughout the crisis. When Richard Fisher retired, I followed him into retirement. Now I run an independent research shop called Quill Intelligence.
That was really fast. That was great.
I said like 30 seconds. I'm like, oh, wow.
A lot there. Very short.
I'm a technology entrepreneur. Started numerous companies, one growing to out of my house that grew over to over $500 million of market cap, and quite a number of different technology companies. And I'm a reluctant author of a book that is now a bestseller called The Price of Tomorrow.
Jeff is being very humble. It is definitely worth your time. So everyone on the webinar should definitely give it a read. But I think that's really interesting. Thanks both of you for your intros there. I think we're really lucky because we've got kind of Danielle's strong background in finance and Jeff's background in tech to inform our discussion today. And I think both of those are going to come into play in terms of the inflation versus deflation debate. So I'd love to just kind of start off broad and get both of your perspectives on what is probably one of the most important questions in macro today, which is, are we heading towards more inflation, deflation, stagflation in the future? What does that all kind of look like? So I guess, Jeff, I'll actually pick on you to go first. If you wouldn't mind just kind of giving a broad overview of how you're thinking about this issue.
Well, so at a high level, we have these two forces fighting each other. Technology, not just technology, but technology has moved into the top thing driving deflation. And so we have exponential efficiency created by technology, and that exponential efficiency is exponentially deflationary in nature. So most of the deflation we will face is in front of us, not behind us, and in front of us, not behind us. What's trying to stop that, because it breaks the existing monetary system that we've known all of our lives, an inflationary monetary system, what's trying to stop that is interest rates going to negative, monetary easing, a whole bunch of effectively warping capitalism to be able to plug the hole that's happening, warping free markets to be able to plug the hole that's happening from that technological deflation. And so that's the grand theme, and everything else is a byproduct of that, right? And so if you think about, why does a CEO use technology? Why does an entrepreneur use technology? Why do you personally use technology? It's to free our time, right? It's not to make prices go up. It removes labor while it does it. And so we should expect the natural order of things is our time being freed and prices going down. That's natural. Right. So fighting the natural order is concentrating wealth, concentrating power, concentrating a bunch of negative side effects for humanity. And so now it's a big problem because these two forces don't work together. And so there has to be a reset one way or the other. But it's the epic battle of our time, and most people don't even realize it's going on.
Excellent. Danielle, I'd love to get your perspective on this. So I think technology is certainly a primary driver of deflation. I know you've talked about other deflationary drivers as well. So largely, do you agree with Jeff that technology is the primary driver of deflation? Are there other market forces that are kind of moving us towards deflation? And how do we see that transition eventually back to an inflationary environment, if ever?
Well, so my viewpoint, I'm saying the same thing, but through a slightly different prism. COVID, if you will, acted as an accelerant, poured on the fire of automation and right sizing. Small businesses in America that employed 47% of the U.S. workforce prior to the pandemic outbreak had gotten into the habit of using, and it may sound strange because we've outsourced so much over the past few generations, but small businesses had come to find that U.S. labor for their purposes was very cheap. Now, in a post-COVID world, they're spending what money they do have. If small businesses are still open, they're automating to a greater extent because their customers want less human interaction than they wanted before. So they're either going to adapt or die. So what we're seeing right now, the reason so many people refer to it as a K-shaped recovery is that we're seeing the haves and we're seeing the have-nots. You've got 26 million Americans collecting unemployment in some form. That is, by its very definition, that is economics 101, deflationary, period, end. If you don't have an income, you cannot withstand and stomach pricing power on the part of corporations. A Pew Fresh research study shows that nearly a third of American households have lost income in some way, shape, or form. So even if you've still got people working under the roof, which is obviously the case for the majority of the workforce outside the 16% who are collecting unemployment, you've still had a household that's lost income. The flip side of this is Jay Powell running like a mouse in a wheel, trying as hard as he possibly can to generate asset price inflation, because that's one of the few places where the transmission mechanism actually works. But that is, caveat, if you can get the banks to lend. Because there's been such a challenge, what we're starting to see is not just asset price inflation in stocks, but he went back to the old playbook, the old Alan Greenspan playbook, and had FHA lending has gone wild. You have seen Fannie and Freddie now have an 80% market share of plain vanilla refinancing, 90% market share of cash out refinancing. Cash out refinancing has totaled $100 billion in the space of 6 months. Redfin tells us that home prices are increasing at a 14% year-over-year rate. So you have Americans pulling cash out of their homes to the extent that they can with interest rates at 2.96%, which has been engineered by Jay Powell. So again, the whole idea of a K is those who've got the 55% Americans who've got stock market ownership, the 60% of Americans who are in homes and not renting. They're enjoying what economists like to call the wealth effect, but the wealth effect never trickles down. So the bottom part of the letter K is where we're seeing deflation and where we're seeing bankruptcies continue one after another, whether we like it or not, because what the Fed can do is create asset price inflation. What the Fed can do is create a housing bubble, which is like 2005 in a compression chamber. What the Fed cannot do is print cash flow, and the Fed cannot print jobs. And that's why we're seeing this deflationary pull that's going to get stronger if we don't get stimulus spending really fast.
So it seems like the K-shaped recovery is kind of the best, or the manifestation of the Fed's, kind of using the expectations channel, right? So when they actually can't impact real inflation or changes in the economy, what they do is they go and inflate asset prices so that everyone feels wealthy. Problem is, not everyone owns financial assets, right? And that causes a huge dispersion, right? Both in terms of financial markets, the real economy, but also just income inequality, right? And there are a lot of social impacts. So in both of your opinions, what do you think is the outcome if we do see that K-shaped recovery and it continues to get, there's a large divergence in the price of financial assets and the net worths of the wealthy and the corresponding effect in people who don't have financial assets?
I'll let Jeff go.
So remember, this isn't just the Fed. This is a global phenomenon, right? So let's just logically go through step by step what has to happen, right? So logically, if technology is deflationary at the rate that I'm talking about and is moving into every corner of every society, and And if, as you print more money and warp capitalism, what it forces businesses to do is implement technology faster, right? Then just period, full stop, right? It means everything else, all of the things that are being done all around the world, effectively, if you're trying to drive inflation, what you're trying to drive is wage deflation, right? So what you're trying to do is make your currency cheaper so you can pay back the debt and later on. And what you're doing is picking the pocket of society's most unable to pay that, because the people that are inflationary in their assets are moving up with the assets. But so why, by trying to do that, what you drive is society breaking and all pointing at each other, not realizing what fundamentally drove the entire thing. And when I say fundamentally society breaking, first revolutions, political divide, you won't hear a question on this topic tonight at the debate, right? You won't hear is technology deflationary? Does that change our entire system that we've built debt and monetary policy around? You won't hear a conversation about that. Yet it's the most important topic of our time. And so if that can't work together with an inflationary monetary cycle, then what does that mean, right? So it means one of two things, and one of two resets is coming. One, let it happen. That's what capitalism would call for, right? But if you let it happen, asset prices, they're so overpriced right now, it's not a free market. Asset prices would collapse by 80, 90%. And if asset prices fell by 80, 90%, then banks would fail as well. The entire system would unravel. So, and what Danielle said is correct. So it's not bad people in the Fed, not bad people in anything else. They're trapped. The time to fix this was 20 years ago, and they, instead of fixing it, they've made it bigger and bigger bubbles, thinking you can solve a debt bubble with a greater debt bubble, and now you have populations on both sides pointing fingers, socialist, Democrat, social, Republican, everything else that's fighting. And then the next phase of that is, no, it's not our fault, it's China's fault or Euro's fault. Because when you're doing this, so the other side, besides a deflationary depression on a reset, the only other way is drive inflation. And so at some point through when Treasury co-opts the Fed, so right now the more they do, the more disinflationary pressures. The next step, Treasury will co-opt the Fed, and you will create inflation, whether it's MMT, whether it's helicopter money, some sort of in the vein of helping people. So, but think about that. I hold asset prices up unnaturally and prevent the free market from working. So the whole bunch of people can't pay for those asset prices, rents, food, everything else going up in price. So the same people come back to me, or in different parties, socialists, to say, save me from the problem you created in the first place, right? That's where we are in this cycle, and that's going to continue because they have no choice. So you can expect massive printing all around the world, and that massive printing is really just picking your pocket. It's picking your savings or your wages are going down, and that's what's causing the revolutions in the street.
Yeah, Jim Grant, I think, has this great quote, which is, "The Fed is the firefighters, but they're also the arsonists," right? And actually, it is funny. Someone on Twitter pointed out that the wildfires in California are also kind of a great metaphor for what's going on in our financial system, because they suppressed so many little fires for such a long time that when the fires eventually come, they're huge, right? And they're record-setting and they're great. And I think, Jeff, you're exactly right, that the Fed feels trapped. So Danielle, I'll pose this question to you. So one thing that Diego de Paria, who's a manager of Quadriga funds, like to say is that the enemy of the Fed has actually transitioned from inflation in the days of Volcker to bubbles that are too big to fail. Is that a statement that you'd agree with? If yes, why? If no, why?
Oh, absolutely. Look, this is a story I can tell in my sleep. When Jay Powell came into office, the Dow Jones Industrials closed down quadruple digits on day one in office, and he didn't say a word. He came into office February the 5th. Later that February of 2018, he had his first congressional testimony. He basically said it's not the Fed's job to backstop the stock market. And he actually believed what he said. And he really was intent on normalizing monetary policy. He really did believe that one man could make enough of a difference to shrink the balance sheet. And then Moody's downgraded General Electric's credit on Halloween of that year. And he got to find out how small one man is and how incapable, given the Fed had just swapped policy from inflating a household debt bubble to inflating an even bigger corporate debt bubble. And that he could not do anything about the fact that all of these exchange traded funds, financial innovation, had actually created these monsters. And investors were trying to pull money from these exchange traded high yield funds, and the collateral backing them was trading by appointment only. There was a massive disconnect, and he had to come out and say, I was kidding. When I was in 2012, when I was a rookie on the Federal Reserve Board, and I said QE was a bad idea and that it was habit forming and that we wouldn't be able to extricate ourselves from it one day if we tried to normalize policy, I was wrong. QE was a smashing success. In fact, I would consider it myself. And that was January the 4th, 2019. Markets have not looked back since. But it just goes to show you how trapped the Fed has become because of the magnitude of the bubbles. And by the way, it wasn't just a baton handoff from U.S. households to U.S. corporations. There's also this massive proliferation of dollars throughout the world now. So you also have to have, you've also got kind of the weight of the world on your shoulders at the same time because of this massive amount of dollar debt financing. So it's just a mess. I mean, there's a very non-polite word to attach to it, which I won't, but that is what it has become.
This is a G-rated program, so I appreciate you not attaching that. Yeah, absolutely. It seems like it's just a really tough situation that's going on right now. So while I think it's easy to take pot shots at Jay Powell and the Fed, and everyone loves the money printer go, kind of memes.
I hate that meme. Would somebody please get rid of it?
Yeah, we'll try, but I think it's out there right now, and it's never coming back. Monkey's never going back in the bottle. But I think one of the things that both of you agree on as well is that the Fed is in an unfortunate situation because they just can't create inflation, right? And there's a lot of focus that gets directed on the Fed and monetary policy, but ultimately, I think we could all agree that fiscal policy is going to play a greater role. Right. So there's a lot of, deflationary forces. And I think we can all agree that it's going to be deflationary for a little while. But eventually, we might see a shift. Can you talk a little bit about the influence that the fiscal side of things has on inflation and why ultimately that's the branch that we need to be paying attention to?
Go ahead, Danielle.
I'll make this short and sweet because Jeff already outlined it. If you create a working class that doesn't have opportunities. In Germany in 2005, they took the opportunity of the crisis to retrain their workforce, to double down on vocational training, it ended up eradicating youth unemployment. We're going in the opposite direction in the United States. What we're talking about now is just stimulus as far as the eye can see, constant $3 trillion band-aids put over things that end up taking, the next $3 trillion takes the debt to 30 trillion. But you're talking about going from 30 to 60, and that's what gets you to a stagflationary situation because eventually the foreign investors that we still rely on at our treasury auctions will step back and say, I'm not taking it for that price. I'm demanding a higher coupon. And that's where you really shift from the Fed not being able to create inflation and it's not directly monetizing the debt to what Jeff described and what Lacey Hunt recently described as well, which is going too far, the pendulum swinging too far to the other side, pushing it on the fiscal authorities, doubling the debt, and ending up with a situation where you still have millions of people out of the workforce, which is still deflationary, and yet you have rising interest rates. You have the stagflationary situation, which was the worst of the 1970s. It's like you're going to go triple down on your gold holdings.
Jeff, anything to add there? Do you also think that we're see us heading?
So let's take the vector of they have to try to create inflation, right? Mm-hmm. And so you and by the way, if you take logically what I said, disinflation or deflation happening from technology, exponential gain in technology, which should bring prices down, which should free our time, which should be a benefit for society broadly, and how that's up against an existing system that we're unaware, then where's the evidence? And the evidence is in the last 20 years, pre-COVID, we had $250 trillion of global debt to run an $80 trillion global economy, with $185 trillion of that new debt coming in the last 20 years against predictably deflation making everything cheaper and a hole trying to fill that. But the problem is, and this is what I outlined in the book, that's looking backwards. If technology is moving exponentially forward, right, then that's the little steps going backwards. So when you're talking about $30 trillion debt, it's nothing compared to what's going to happen. It has to explode mathematically. And that explosion then, so that money, as Danielle laid out, it goes into asset prices. It goes into, essentially, it's robbing from the free market because you're trying to protect your money from falling in value. That's where, and it doesn't matter where you are in the world and that's happening. Why do you think China, anyone in China that knows the currency has to go lower, takes their money out of China and puts it into your real estate? It's a function that happens. Hot money racing around to try to protect its value, that steals from the overall economy further, right? So adding more of that, as every country is going to do that, and then move into fiscal, right? Because those prices we talked about, as those prices are high, I have to get people working. Essentially, is saying this: I'm going to concentrate more control in government hands to produce outcomes, right? So they're going to be, and we know how that works, right? It moves into authoritarianism. It moves into, and there's no way out of this right now. I wish there was. I wish there was, but that will eventually be hyperinflationary. It'll destroy real currency's value. It won't be right now, but when the fiscal side comes on, you're going to move into first, probably, as Danielle said, stagflation, then hyperinflation and everything else. Here's what I would ask. At that point, as currencies are destroyed one by one all around the world, and the feedback effects from those currencies being destroyed, right now you're seeing it in Turkey, right? And now remove that, now have that labor component way cheaper on a global market, because that's what happens, right? And remove that market from exports, so they can't import because their dollar is worthless, right? And these feedback effects start racing around the world. And so it just takes down currency after currency after currency on these feedback effects. And so you just keep on going. And we have to do it ourselves. We have to lower our dollar value in the US, if you said, or Canada, where I am, in relation to the world. How does the government now get out of that, right? How does the Treasury get out of that box? Because now you have this crazy debt and you have this inflation, and inflation is trying to make the debt cheaper in real terms, or nominal terms. Now you have this hyperinflation. Now, what government says, okay, now we're going to stop inflation, right? Volcker did it in 80 by raising interest rates to past 20%. And what did that do? The economy collapsed, right? So think about a government trying to do that today. If they won't do it now, right? And now the Fed has taken the risk, and the banks have taken the risk, and then we have more debt today. So by increasing interest rates at that time, you just try to stop hyperinflation. You essentially collapse the entire economy and the Fed, because the Fed now has absorbed the risk from the market, when in 1980 they hadn't. So So I wish, I really wish that these weren't as binary situations right now, and we could talk about, okay, it's going to be glorious, we could just keep on printing our way out of this, but we can't. The next 10 years are going to be, this is a way longer cycle. Some people think this can happen tomorrow, right? The U.S. could get a lot stronger in a world of weak currencies, but it getting stronger pushes so much pain around the world that as a byproduct to get it getting stronger, it has to get weaker. So if you just play this merry-go-round, it just keeps on going. Now, so where in safety is that, and what assets will be more or less protected, and where do you personally kind of put not just money, but if you can expect that society is going to break in different places, how do you look out for your family and look out for everything else? I think that's going to be a greater conversation for our time right now.
Yeah, absolutely. And I definitely want to get into kind of, protection, both, I guess, just from a social perspective, but also investors on the line who are looking to understand how do you position yourself in this crazy world? And it's just so nuts. But I think I'd like to get into the kind of what the transition looks like over the next 10 years, because we're talking about some pretty crazy stuff right now, right? Like you said, Jeff, very binary outcomes. I mean, stagflation in the US or, hyperinflation, those are global kind of really huge inflection points, right? The likes of which we haven't seen for a really long time. So I guess my question to you is, what do you think the next 10 years looks like specifically within the context of the US dollar? Because I think the inflation debate, inflation versus deflation, it really all comes back down to the US dollar reserve status, dollar hegemony, and does that regime continue to exist, or how long can it continue to exist? Danielle, I'm going to pick on you here because I know you have strong opinions on this topic.
Well, so we ran a correlation, and the correlation between the euro and the growth of the Fed's balance sheet was upwards of 83%. So when Jay Powell, who was begging for stimulus legislation to get passed because he needs more product to make the burr go burr, when the Fed can grow its balance sheet at a faster pace than it is doing at the moment, and it's slowed, which is why we're seeing dollar strength coming on. But whoever's winning the growth of the balance sheet battle is winning the currency devaluation battle. And that is what you're seeing go around the world. Right now, Christine Lagarde's got more product. So Christine Lagarde's got more stuff to print. So she's winning. But that being said, even if it's a contested election, you can easily see the Fed having at least $3 to $5 trillion extra out there of product, if you will, between now and the first quarter, when the CARES Act forbearance goes away and you start to, right now there's a $2.2 trillion stimulus bill floating around out there that's got further housing stimulus in it, so that you can make sure that the banks can never foreclose on these people. So again, but they're trying to buy time, but not in a productive way. But as far as the currency war goes, it's whoever's growing their balance sheet at the fastest pace, whoever is printing more money. But the problem with the reason that the scenario that Jeff lays out is so dire is that there is in the background, as you become more authoritarian, as you become more dependent on the state, theoretically, if we're not going to do infrastructure spending, which we've been waiting on for a generation now, it's been the lowest hanging fruit for how many presidents in a row? So if we're not going to do what's logical to grow the country and to put people to work, which by the way, China has done, and if we're just going to throw non-productive stimulus cash at people and to help them not work, then you will push more towards an authoritarian regime, which means you will continue to de-globalize. And de-globalize is the trigger that Jeff describes that sets off the inflation, because you become an insular economy as opposed to importing deflation, but of goods made elsewhere. And that is what takes you from one step to the next to the next. And these are, as you just said, we're talking about events that unfolded in 1914, which segued into events that culminated in the late 1920s. which turned into eventually a war that was decided based on who had the least amount of debt coming out as the global superpower. That's what we're talking about here, which is pretty heady stuff, which makes me think that maybe I should move somewhere peaceful. Anyways, I hope that answers your question.
It certainly does.
And can I just build on what Danielle said, and it's just in the frame of what's happening with technology. And so why infrastructure projects? By the way, I think that the US should be doing infrastructure projects instead of doing what they're doing now. At least it gets people back to work. But if you ask why, it's because it's a road or a bridge or something like that, or it decreased the amount of time between home and office. And as a result, you didn't just get the short-term benefit of labor going into the project. You got the long-term benefit of faster commute times, and therefore more productivity, right?
Yes.
That's why infrastructure projects are a better bet than other things. But here's the problem with that today, and it's still true today. But this Zoom call, everything we do is digital, and digital doesn't care, right? So I was on a Zoom call with the House of Commons Finance Committee in Canada, and they didn't realize, and I'm talking to about where the money needs to go to have the to have the long-term benefit. Because if you're putting debt in, it has to have a benefit over the debt. Otherwise, the debt fails at some point. But so I'm on this House of Commons call, and we're on a Zoom call, and there isn't one job in Canada from Zoom. I know Eric, the CEO of Zoom, fantastic guy, but it's not a Canadian company. Technology is borderless, right? The digital, what we're doing right now is completely borderless. And so you have a whole bunch of technologies coming in right now, and then a whole bunch of companies that said, I'm going to work from home forever, right? I don't need the real estate space. So that means the real estate space has to collapse in value, has to, unless you prop it up. But the second order effect is this. If labor can work from anywhere, wouldn't you either hire the best labor in the world from wherever it is cheapest? I know I would. I have a technology company in India with over 100 people there that builds technologies all over the world. And the talent level is extraordinary. And if work from home, and it's always work from home, what's the difference? So the point is, people don't understand actually how fast that's more deflationary, how the labor is coming out anyways. And we're building a house of cards that is going to kill people because when they fall off this treadmill, you can't retrain fast enough. It's impossible to retrain fast enough to artificially hold prices high, so that when they don't have, so it forces businesses to look for cheaper, better labor everywhere. So, and I wish that would be the debate. I wish that because if we started having that debate on how do we prosper from this instead of try to feed an existing system built for a different time, we would see that the very thing we're fighting against, the thing that effectively saves humanity and makes all of the abundance broadly based, is right in front of our nose. We're pushing it away. But people are so caught in their framework of how the system has to work that they won't even question, wait, can it work anymore?
So I think maybe this is a good transition to, this is the current situation as it exists right now, right? I think we can all agree that this is a system that's just not working for everyone. If you look at the current reserve currency system that exists right now, it contributes to economic inequality in the US. Our international constituents hate it, right? We have Russia and China, more specifically, working on alternatives right now. You've even seen some attempts at kind of international settlement between countries that outside of the system of the US dollar. Nothing that's going to happen tomorrow, but we can kind of see a lot of evidence around us that the system as it exists today isn't working. I think the big question is, are what people have trouble wrapping their minds around is what a transition off of the US dollar would really look like, right? Because it's just so, I mean, something like 80% of global trade is denominated in US dollars. So the thought of shifting away from US dollars, there's just so many frictions there. It's just, how do you even break that down, what that transition would look like? And I think it's going to be messy no matter what. But what everyone does seem to agree on is that the current system as it exists today isn't working and ultimately needs to change. So maybe skipping ahead of, after the transition point, what does the new system look like? Because there's this sort of question, okay, the US dollar system isn't working, but what are we going to shift to? Are we going to move to the yen, the yuan, the euro? It doesn't seem like there's a good replacement right now. So in both of your opinions, what does the global monetary system look like in a post-US dollar regime?
So I think that as messy as it inevitably will have to be, because it is so interconnected and so intertwined, I think that as long as you have one government that is methodical about it, that I'm not an advocate for. I don't believe in a bunch of countries coming together and agreeing to have a basket. That's not how egos work. That's not how world history has been. We were speaking before this started today, back to the Roman Empire. That's not how things have worked on planet Earth. It's just not, it's maybe it's possible in some future world, but I can't foresee it. What I can foresee is China being methodical. They recently came out and said, we are going to methodically reduce our treasury holdings from where they are today, north of $1 trillion, to $800 billion. And we're going to hold it at $800 billion as long as, quote unquote, there's no military conflict. So, I mean, they put it in writing. They said it out loud. And if you think again about, this hadn't occurred to me until Jeff said it, but if you think again about an economy that is increasingly reliant on its government to support its people, which is socialism-esque in some way, shape, or form, that necessarily leads to authoritarianism, which necessarily leads to a much higher risk of currency war going to trade war, going to hot war. And it has typically been the way of the world back to the Roman Empire. I can't foresee the world saying, again, there's going to be some cute little basket of currencies. The yen is a basket case. I think the European banking system is proof positive that a great crisis was squandered because they haven't cleaned up their balance sheets. So there is no other alternative to the yuan, but because there's no viability in terms of a means by which to transact currently, I think it would have to come about in a much different way, in a military type of way.
And I'm gonna take a little bit different course and tie it to. So I totally agree with what Danielle said as far as the sands of time, the pendulum of time. If you look through history, this is a pretty what we're seeing right now. It just repeats through time. If you go to, so let's use China as an example. There has been no country ever that has created debt to GDP as fast as China has. It is the same house of cards, just on exponentially more that every currency is around the world. Not only that, and so why do they want their own digital currency, and why do they try to construct trade in their own digital currency? Because if they can do that, they own the world. Right. And so that's why US is going to try to create a digital currency, because they can essentially, what you can do is you can immediately put a -5 interest rate in. Right. And you can pick the pocket of it. It leads to more and more control, and it leads to more and more isolation. The question from a game theory perspective is this: what government in the world, after seeing a currency based on a fiat currency in the US, realizing it could be manipulated, and that manipulation exports their problems around the world, right? What government in the world would trust another government to not manipulate? Power corrupts, absolute power corrupts absolutely. And as you grant more power, authoritarian power, that will create way more authoritarian governments. And if you see what's happened, so last week, a Chinese billionaire in real estate went to jail for 15 years, not because of the real estate thing, because he commented publicly on China's leader, right? And then, oh, okay, now you created fraud. That's why we're going to put you in jail. That's what happens, right? This is so. Now take a business landscape look at this. What ends up happening to an existing business? Let's use Blockbuster. I use that analogy all the time because it's easy for people to understand. But Blockbuster, all they missed is how fast technology was moving and download speeds went from to you could download a movie overnight. It wasn't bad executives, but the minute download speeds changed, Netflix had the advantage, and nothing Blockbuster could do could stop that. They had 9,000 stores with all the costs and everything else that relied on people driving to the store and paying for a movie and then getting late fees. So what did they do? They added candy aisles, right? And we laugh, those stupid people adding candy aisles to the stores. Well, the new business took off, right? And Netflix took off. And so I don't think anything that the governments are doing right now, every government, they're adding candy aisles, right? It's a good way to look at it. Everything they're doing is making the problem worse, right? Well, and maybe a lot of people on this show don't, but Bitcoin is a new business, right? In that it's a new monetary policy. Yes, maybe it still has risk, but it works on a network effect. And I suspect because of that, at some point, governments will be forced to peg to it, to bring order to currencies. And it might not be the biggest governments at first. It might be smaller ones that realize, wow, there needs to be some order. What is trust? What is my money? What is money, right? And I suspect that as that happens, first through general population, then more business, then small governments, then bigger governments, I suspect, just like in business, this problem won't be solved by the existing status quo. It'll be solved by new.
Danielle, I think you actually are not a huge proponent of Bitcoin, so I'm curious to get your take on what Jeff said, and if you don't agree, what do you think is the replacement for the current USD system?
Well, I mean, maybe it's because I'm bitter because I'm got Italian blood and I'm still bitter about the fall of the Roman Empire. I understand everything that Jeff just said. I just don't know how to get there because that's actually a very peaceful route.
I think it's the most peaceful route.
It is absolutely the most peaceful route.
And
But that means that cooler heads prevail, and that this has an order to it.
But it also Danielle, it also means just dealing with human nature and game theory, right? So each time, the more this goes on, there becomes an incentive for other governments to peg to it earlier, right? Again, anything that creates the incentive structure built into it creates greed. Right, that drives early adoption, that drives it broader to society. At least that's the hope. At least that's my hope. Because, and by the way, that has nothing. And I say this totally. If Bitcoin went to zero right now, and we could safely transition in a better way that was better for society, that's what I would hope for me personally. I'm saying Bitcoin because I think it's actually the safest way to transition society. It's still going to be messy on the way through, but I actually think that that's actually the biggest benefit for humanity to get through this without hot wars.
Well, so I'm going to do something I don't normally do. I'm going to plug a recent Wall Street Journal story that Greg Ip wrote about the dominance of China in the technological space. And they had gone basically, this was telecommunications equipment. And they've gone from having kind of a regular market share to now they've got 32%. And what Greg's point was basically was if China is allowed to very quietly pass that 50% mark, that could be very determinative as to where the future lies because of who's in control of how we communicate. So I would prefer, and I was encouraged to see a country as dependent upon China as Australia lead an international coalition to look into the origins of the coronavirus. And I'm not talking about the coronavirus itself. I'm talking about a country of Australia that is literally dependent on its natural resource exports, its exports of services, education, real estate, you name it, but actually coming out and speaking out against China. 116 countries joined in that. And I think that if there is an effort to make sure that there is not a de facto, because I think that technology is the future of where power lies. But if there is not one country that has the majority of control, I think that we could have a much more orderly transition as what Jeff describes. But if there is the ability for a superpower to rise and have all of the 5G, AI, next generation of technology within their borders, I think that is I think that changes the game.
And I apologize for everyone watching. I'm having a little bit of internet connectivity issues here, which is why I switched to no video. But I want to dig a little bit deeper into this issue here. So I think one of the things, when it comes to something like Bitcoin, there's a lot of stigma. There's a lot of around the cryptocurrency space in general. I guess, Danielle, I would phrase it to you in a different way. Maybe, regardless of your thoughts on Bitcoin as an alternative, do you think that a form of sovereignless or sovereign-free currency is possible? Because I guess, it all does kind of come down to what Jeff was saying before about game theory, right? And I think this is almost like the prisoner's dilemma getting played out on a grand scale, right, on a global stage. And at a certain point, people do figure out that it is in the best interest of everyone, U.S. included, because our status as the exporter of the global reserve currency is causing a lot of problems on an internal and domestic basis. So game theory actually predicts something that global markets are not pricing in, which is there actually is a strong possibility for a sovereignless form of currency. Do you think that ultimately that's possible?
Well, I'll go back to the last point I just made, and that is that as long as you've got the same size gas station opening on the other corner, that's fine. But if you have a gas station on one corner and then you have Costco come in with 30 gas tanks on the other corner and they're so big, then I think that is what is, again, a determinant. There's going to have to be a modicum of peacefulness that's associated with having a sovereign-free fiat currency. This is a regime change that you're talking about since the beginning of mankind. Mm-hmm. And for something like that to occur, it really has to be different this time. And that is why it's not, look, I wrote a book called Fed Up. I mean, I'm so fed up with undisciplined monetary policy, and I believe in sound currency. And I enjoy what you're describing as a potential outcome because it's a lot better for my kids. They can just say, okay, I speak Mandarin and I don't have any reason for it. That's great, Mom, thank you. And not actually have to use the damn language in the first place. So I would rather that be the course that the future takes for the sake of my children and grandchildren. I just don't know that is necessarily how human nature behaves, because Jeff has been spending time speaking to politicians who largely probably don't understand enough about what he's saying to implement what the right thing is to do.
That's why I use the example of Blockbuster, because it gives it, and that's why I also use the example of Blockbuster, and it's not bad executives. All they missed is how fast technology is moving. Same thing in Kodak. Their business model was designed around something totally different. And even though Steve Sasson, who was at Kodak, invented the digital camera and twice tried to get executives to take it seriously, and today we have an abundance of photos. We have way more photos than we had then. And they're all free, right? You can't charge for things that are in abundance, just like you can't charge for the air you breathe, right? And so technology creates that abundance everywhere, and we're trying to manipulate a system. And by manipulating the system, we concentrate and we concentrate wealth, we concentrate in inequality, and we concentrate and we make the system more fragile by design. It's going to change. But very rarely does anybody in an existing system see they're looking at individual components of the system. They're looking at housing always goes up. Stocks always go up. You hear it all the time. Without asking the question, would housing always go up if we didn't stimulate $185 trillion of new money over the last 20 years? And the answer is simply no. And so if you believe that housing always goes up, then you have to believe that you can get away with that again and again. And so again, but people individually, you cannot measure a system by its individual parts, but people are in the system in their individual parts, and they can't see the bigger change that's happened. It doesn't make them bad people, right? It doesn't make Powell a bad person. He's stuck. What do you do now, right? What on your watch do you say, okay, banks fail, everybody fails, we're going to crash the entire system? That's where they're stuck. And every central bank is stuck in the same place. As a release valve to that being stuck, that's why Bitcoin is very high. I think in all probability, I might be wrong, but I think that that's what's going to happen. It's going to, because people are starting to understand, it works on exactly the same technology backbone. It drives on a network effect. And as more people trust it in relation to currencies, right? Because it doesn't lose its value like currency does. It can't be stolen from you by like currency does. More people will trust it, right? If you go to Venezuela today and ask somebody which one would they want, right? You'll see the truth. As that happens, country after country after country, predictably happens country after country after country. The on-ramps, in other words, the trust to Bitcoin gets higher and higher and higher. And at some point, I think that on that network effect, the value of the entire network becomes extremely valuable to be able to make this transition. It will take time. The existing system will not go quietly into the night. There's going to be massive feedback systems. Dollar gets stronger, dollar get weaker, other dollars get stronger, weaker on the way through. But it's actually all bullish for, I hope, a safer transition to a monetary policy that actually understands what technology could, understands that technology could give us abundance.
So my final question to you both is it seems like, minor disagreements here, but again, we were right to not call this the battle of the booze, because I think generally you're very well aligned. I think the one key, takeaway from this is we're going through a period of transition, right? And there's going to be a lot of volatility. And my question to you is, how, as an investor, do you position yourself to deal with that? And I'm not necessarily talking about, hey, I'm a hedge fund and how should I be trading this, but more in terms of like, how can I preserve my wealth, right? And how can I make sure, Jeff, you used a statistic earlier on this talk that asset prices could fall by as much as 80 or 90%, right? So I'm hearing that and I'm thinking, how do I just make sure that what I think of as my net worth and my wealth and the way that I provide for my family, how can I protect against a downdraft that serious? So I guess, how do both of you think about just positioning yourselves in a way to deal with the transition that we're going to go through?
So I would just say, for the old stogies out there like me, we express it in gold, because people don't realize, if you look back to history, in deflationary times, gold outperforms as long as there's sufficient disruption going on in the background. And it works in inflationary times, of course, as well. But this is the first Bitcoin argument that's ever swayed me. So God, the Twitter sphere just blew up. But to Jeff's point, however you want to protect yourself in something that is going to behave agnostically to what central bankers are doing, that is where you should have a bold position in your portfolio. And, my personal philosophy has always been, if you see a company that's going to be extraordinary and it's going to be an innovator and it's going to be a trendsetter, and you have the opportunity to invest in it directly and seed it, which I've done several times, go for it, do it. Because there will be survivorship. There will be good companies that come out of this. It's not as if the world is going to come to a screeching halt and end and there aren't going to be any companies. There will be great places and good entrepreneurs and great opportunities while you're protecting, whether it's gold or Bitcoin, while you're protecting what you've what you've spent your entire life earning. So.
And for me, I'm fortunate because I get to work with a bunch of the leading technology companies, either as chairman or co-founder. It's so in an early stage, and I'm able to construct them in a way that they take advantage of the technology and what's happening, network effects and what's happening. So that's probably where I spend the majority of my time. And as a result, when you know kind of what's happening on this, you can do very well in those technology companies, exceedingly well in those technology companies. If you made a really good point on if asset prices collapse 80%, right? If governments stop printing. So if you believe that that's going to happen, if they're going to stop printing, then you would want to get out of assets and you would want to get into currency. Because if they do that, then the currency will actually go up in value. But I think I've made it pretty exceedingly clear that they have no choice. They won't do that because, by the way, if you did that, you'd also want to get your money out of the bank because the banks will fail too. And then that your currency value, because things would reprice so fast, you would be exceedingly rich with your currency, right? And you could buy assets for cheap, and as a whole system cleared. I suspect that will not happen. So these bets that we're all stuck in are kind of sub bets of monetary policy that's over here, and they're binary in nature. Mm-hmm. And so now take the opposite example. I know that governments are going to keep printing, and so I need to get in assets, and so I need to actually add more leverage, right, at low interest rates, and I'll buy housing with that as an example, as an asset class. That actually should do well if they keep printing, as should stocks, as everything else. In real terms, maybe not. But here's the problem with that. Later on, governments have to tax that at different rates, right? And this is what happens throughout history that a lot of people don't see. All of their wealth is concentrated and denominated in the local currency. Their businesses, their housing is, their stocks are, everything is in that local currency. And then you go through an event like this and a reset at some point, and there's no way out, right? So we talked a little bit about, in times like this, you get rise of authoritarian regimes as predictable, and people blaming everybody else for their problems when it's something else. And in times like this, you can see it coming from a long way away, right? So if you looked in Germany, 1920 and through the 20s to the 30s, when Hitler was rising, people were wheelbarrowing money to buy bread, and extreme hyperinflation, tons of joblessness and everything else caused by something that was way back over here. But they didn't see that. So they vote for people that say it's not your fault, it's somebody else's fault. And that kind of continues and continues. But once you're stuck in a currency like that, and all your wealth is in a currency like that, how do you leave? Right? And that's the problem. And so people, and in the past, people don't leave because actually a lot of the wealth, including if you have real estate assets, they're going through the roof, and you feel richer and richer and richer through that as society is getting poorer and poorer. And so you stay, and then you realize, if I leave, I'm going to be a refugee. I can't, now there's currency controls, now there's everything else. I'm going to be a refugee in another country because I can't take my wealth with me.
It's 1 o'clock.
So I would say that's one of the reasons, probably the safety reason as well, that Bitcoin becomes, if you remember 12 words, you can move anywhere in the world. And other governments will, I think, will embrace you on that, because it's similar to governments today, trying to attract wealth and talent to their areas.
So we're drawing really short on time here. I know we need to wrap it up, but I just can't wrap it up. Jeff, that was brilliant, but I feel the need to end on a positive note. So actually, I'm going to call on both of you, just 30 seconds. What is one positive note that you see right now in the existing macro business landscape? Just one thing that you're excited about, just to end things on.
I've got one word for you: telemedicine. Loving it.
Telemedicine. All right. Interesting. I love that. Jeff.
Technology, if we would let technology happen its natural course, that would give broad-based abundance to society. That's what would happen. And so it's not technology that people are fighting against. It's the manipulation of currencies against technology's power. So the technology is really powerful, and it'll provide abundance for the first time in history, we could actually solve the abundance problem for society, where technology is going.
Excellent. And usually we leave some time for audience questions, but I actually just could not get myself to stop the conversation you two were having, since it's so interesting. But in case anyone in the audience is interested in reaching out or contacting you, what is the best way to get in touch with both of you?
Twitter's a hard avenue for me these days. I can barely keep up with it, especially since I've got a bunch of crazies on my feed. But reach out to me, Danielle at DiMartinoBooth.com, or find me at QuillIntelligence.com.
And mine's probably Twitter as well, at Jeff Booth on Twitter.
Excellent. Well, I cannot thank you both enough. Thank you so much. This has been a riveting conversation. I think it's given us both a lot to think about. And hopefully we can do something like this again soon.
Look forward to it.
Thank you very much.